Oklahoma State Extension's Derrell Peel is our cattle market analyst this week. Live and feeder cattle futures contracts were lower to start this week following key USDA reports Friday. The agency's July inventory report tallied 103 million cattle and calves in the U.S., the most since 2008. And its cattle on feed report showed placements during June were 16% higher than the previous year. The overview of beef numbers is typically a twice-yearly estimate from the USDA, but federal budget issues precluded July releases in 2016 and 2013. We talked with Derrell Thursday morning and started by asking what the inventory stats show about the current state of the industry.
Well, the mid-year cattle inventory report, shows herd expansion. I think that's pretty clear. It's a little hard to interpret this report. We didn't get it last year. USDA has only issued this report 3 out of the last 5 years. We did not get last year, so we don't have year-over-year comparisons. But the all cattle inventory was up about 3%, or up to about 103 million head, excuse me. And, the beef cow inventory showed to be about 32.5 million head. You can't compare to a year ago, but particularly for the beef cow number, if you compare July to the January number we got, and you look at how that compares historically, it's a fairly large ratio, about 104%. And what that means historically is anytime that was over about 102%, we were typically in herd expansion. So I interpret that at this point to mean that we're probably still adding cows to the herd in 2017.
How do you weigh these numbers short-term versus long-term?
Well, I think longer term, it confirms what we've been saying. I don't think it really changes our story very much. There's some indication in this report, the heifer inventory, the beef replacement heifer number. Again, we don't have year-over-year comparisons, but it's a fairly small July to January ratio, which may indicate that we're slowing down on heifer retention. So I think for me, it confirms that we're still expanding in 2017, but I think the question of whether we continue that expansion into 2018 it still remains to be seen.
Would you say the market reacted more to those inventory estimates or to the latest cattle on feed report?
Well, I think the cattle on feed report really, got everybody's attention. The placement number, of course, was the big news in that. It came in about 10% bigger than expected. So placements in June were 116% of last year, compared to 106 that was kind of expected. And so that really dominated the market, I think, and continues to some extent. And I think it's possible to overread that. Obviously, the market just got surprised by the numbers. But if you look at the weight breakdowns, for example, basically what happened was feedlots have had a lot of money. They've made a lot of money the last couple of months. They historically spend that money on buying more feeder cattle when they have money. And so they placed all of the big cattle that were out there, and then they reached down and placed a lot of lighter weight cattle. And so the weight breakdowns confirm that that's where the surprise came, was the fact that they placed a lot of lighter weight cattle. And that means that those cattle are in there now, but they won't be there later. So, again, you can overplay the importance of this in terms of the total numbers. It changes the timing somewhat.
Can you explain where those animals are coming from? There was some thought that because of drought in the north, there would be more cattle placement there, but really it was across the board, right?
It really was across the board. I don't interpret this mostly to be a drought effect. Certainly the drought did have some impacts regionally. There were very large placements, for example, in South Dakota, and you would certainly attribute part of that to the drought. But in general, again, I think the economics of the feeding industry and the profitability that feedlots have had is the biggest contributor to this large placement number.
So from what you see in those numbers and from what we know about animals entering and exiting the feedlot in terms of how heavy they are, what do you think it means for overall supply here as we close out summer and move into fall?
Well, again, if you look at it, we've had 4 months of large placements. The first 2 months of that was almost entirely oriented towards the heavy end of placements. So those are the cattle that'll come out first. Starting in May, we started to place a few more lighter weight cattle. And then here in June, we placed a lot more of the lightweight cattle, and those cattle are going to come out later. So we haven't really created a timing issue. In fact, these large placements in June were lightweight. They're going to come out last. So again, I don't see that we've created a major problem with it here. It's just a question, and we do expect that these placements will not continue to go at the rate that they have the last 3 or 4 months. They should come down on a year-over-year basis. They may still be up, but not up as much as we go forward here through the rest of the summer and into the fall.
The average cost of all fresh retail beef jumped 20 cents from May into June. Do you think this is the start of an upward trend?
Well, I think it's a sign of very good demand at this point. We've enjoyed, choice retail beef prices have increased every month this year, starting in January from the December levels. And that's a bit surprising. We're putting more beef on the market, and we've got increases in both pork and poultry supplies. So, I think it's a sign of good demand. There's no real reason to think that's going to change. I don't know that we'll continue to add to those retail prices because we do know supplies are going to continue to get bigger as well. So I think it would really be a little bit unexpected to see them continue to increase, but the fact that they've maintained and actually increased thus far is a very strong sign. And we're starting from a very good place, even if we do see some weakening of these prices over the next few months.
What's your price forecast here for live and feeder cattle markets?
Well, we're in midsummer right now, kind of the summer doldrums. This fed cattle market has held up stronger than expected. I wouldn't be surprised if we don't have just a little bit more weakness here, but we're getting close enough now to thinking about moving into the fourth quarter when we typically see a little bit of seasonal strength in that market. So the bottom line is I think we're going to go mostly sideways. We're probably getting through the summer a little bit stronger than I expected. And we'll probably, again, move mostly sideways to perhaps a little bit stronger as we move into the last part of the year. Feeder cattle, kind of the same story. They've been stronger than expected. They have taken a hit, obviously, after this last cattle on feed report. But in general, we're very current. We've had good forage conditions that have helped feeder demand from a backgrounding and stocker standpoint, and we've obviously had very good feedlot demand, and I don't really see that changing. So again, I think we're going to maintain this thing. Seasonally, of course, calf prices will weaken into the fall. They always do, but we're starting at a very good place and should maintain good prices throughout that process.